All right, the Fed's monetary arm, the FOMC, will give its final pronouncement tomorrow at 2:15 p.m. Maybe the stock market hangs in the balance. Let's talk about it. Former Dallas Federal Reserve Bank president and CNBC contributor Bob McTeer and Jack Ablin of Harris Private Bank. You know, Jack, there's a headline out there, another news service. The Dow hits a 2-month closing high on hopes for easy Fed credit. Is that really the case, Jack? Does the stock market require a zero interest rate right now to continue to rise?
I think it does, Larry. I think that the right now conventional wisdom is that we're going to have lackluster job growth that will prevent the unemployment rate from sinking below 9%, that will keep the Fed on the sideline throughout 2010. That's consensus. I'm not at consensus. I think that job growth could come in a lot stronger front end. That could prompt the Fed to start raising rates and then realize that, hey, you know what, we did too much, too fast, and we upset the apple cart. That's a concern.
All right. Let me come to Bob McTeer. Look, Bob, the real GDP increased at 2.2% in the third quarter, 5.9% in the fourth quarter. That means the second half of 2009, it grew by 4%, okay, at an annual rate. The recession ended in June. That is the consensus. The consensus of economic forecasters is 3% growth this year. Probably could be higher, but let's just use the consensus. Why is the Fed at zero? The Fed is running an emergency policy when, by all accounts, Bob McTeer, the emergency is passed.
Well, first, let me say that that large number in the fourth quarter, I would discount a lot of that. It was simply because inventories were shrinking less fast. And so I'd say it's about 2.2 for the second half of the year rather than 4. I think tomorrow what they really ought to do is drop that extended period language, as Tom Honig suggested at the last meeting and dissented on. That will give them the freedom to be flexible in the next couple of meetings. And I think the problem right now is interest rates are too low, but the money supply is not growing all that rapidly. And I think they need to make some distinctions there, maybe tick up the interest rate, the Fed funds rate, just a little bit in the next meeting or two, and explain that the real monetary policy has to do with the growth of money. And it'll be a while before that needs to go up, I think.
Jack Ablin, you know, even if the Fed went to 1 or 2% on their target rate, they'd still be very easy and accommodative. And Jack, I just want to ask your stock market wisdom. We don't have as much time as I'd hope, but there's people out there saying earnings, you know, $85 a share. The stock market multiple is only about 13, 14 times earnings, and long-term rates are fairly low as a discounted rate. What's wrong with that scenario?
No, there's nothing. I'm actually pretty constructive on stocks right now. But I will say we're enjoying, and to Bob's point, we're enjoying a nice favorable tailwind. But the problem is a lot of that tailwind is artificial government stimulus. So we have not left this debt-induced spending spree. It's just we've moved the debt from the private sector to the public sector. So to suggest that we need to now raise rates while I think a lot of this stimulus is starting to wind down, I think is probably asking a little too much of this fragile economy.
Well, maybe. I don't know. I don't think it's this fragile, but I hear you on that. You buying stocks or selling them, Jack?
I'm buying, but I'm buying on, I will say I'm buying today with potential of selling in the third quarter. I think we've got, you know, certainly a fair market. We got an economic tailwind. We've got enormous liquidity. Investor psychology, I'm going to call it somewhere between sanguine and skeptical, but we got some positive momentum, and that's really been the key. So putting it all together, I'm still pretty constructive, but my concern is we got to, you know, the hurdle rate keeps getting higher and higher, and I think third quarter we're going to end up breaking down.
Bob McTeer, this is very unfair for the last 25 seconds, but does the Fed's new banking oversight responsibilities compromise their monetary policy?
Yeah, I think everything that's happened in the last year and what's going on in Congress now and the Tea Party movement and everybody trying to court them, it's all having its effect, and I'm afraid it's negative.
All right, afraid it's negative. We're going to come back. We have to talk about this more anyway. Bob McTeer, Jack Ablin, thank you, gentlemen. Sorry we ran short. We'll have you back soon.